Okay traders, welcome back. So we've been through the 30-minute, 1 hour, 4 hour method of what price action looks like when it breaks through a zone, when momentum in the market is taking price in one direction and we want to get involved with this trade. Okay, there's very clear methods that I've taught in the previous couple of videos that you can use and you can practice, and you after not a very long time you're going to get very good at this. And the success rate is going to be quite high. Okay, but what does this look like on a lower time frame? And when I talk about lower time frame, I'm talking about the 5 minute, 3 minute, 2 minute, 1 minute. Okay, well, when price comes down into a high time frame zone, so like a 4 hour supply zone or a support zone or an order block or whatever it is you want to call it, okay, there's specific patterns that people look for in order to get a pullback or to get into a reversal, or they're looking to buy from 4 hour support and sell from 4 hour resistance. Okay, so what you'll see is a lot of the time on these lower time frames you come down very quickly and then price will just bounce off it and start making like a zigzag. Okay, now this zigzag will create a high and then a low and then a high, low, high, low, high, and that will entice buyers into this market. Okay, so what you'll have is stop losses here, then you'll have stop losses here, you'll have stop losses here, and you'll have stop losses here. Okay, now if you actually pay attention to what's going on here, it's nothing more than a reaccumulation most of the time. Okay, there are variations of this which I'll go through in the later video, whereas it would actually become a reversal pattern. Okay, so we'd be looking for, instead of high, low, etc., we'd be looking for a low and then a slam down, like a liquidity grab, and then a high which comes past this height and then down again, but a higher low basically, and then, but as I said, we'll go through that in a different video. Now, when you draw some other funny looking lines and you actually realize what's happening, okay, price comes down, slams down into the zone, okay, starts to pull back, right, and you got this kind of pattern. All right, this is nothing more than a bear flag. Okay, and you flip it over, that is called a bull flag. Okay, now it doesn't always have to be symmetrical like I've drawn it here. This is just for educational purposes, illustrative purposes. Okay, what will normally happen is you'll get this kind of bounce and this retracement. This could go on an hour, 2 hours. It can go on a lot longer. It may well go on and on and on and just not do anything. Okay, but during high volume periods of the market, London and New York, 9 times out of 10 this will occur pretty quickly, and then you'll get a slam out, and then you'll either just follow through and continue down, or what will happen is it will go into another reaccumulation phase and it will do the same thing. Okay, so this is order flow in the market basically, which again I'll go through in another video. But order flow in the market, okay, so if you were to look at this pattern here and this pullback here, you'll probably see the same sort of pattern on the lower time frame. And you can also use these patterns to scale into trades when you're mid trade. Say you've got one hour in profit, move to break even, you can scale down on the lower time frame and you can actually add into your trade and maximize your profits without increasing your risk then. So let's take a look at what this looks like in terms of actual candlestick price action. Okay, so I have an example here on GBP JPY. Okay, and what you'll see is just through the lower end of Asia, okay, we've got this accumulation phase here. All right, now this is basically accumulation of price before price is going to move in whichever direction they intend to move it in. Okay, so obviously in this example we're looking at bearish. If you flip this over and look at it the other way around, it's exactly the same principle. You're just looking for a bull flag and accumulation, whether it's a rectangle, whether it's a triangle, whether it's a parallel channel, it makes no difference, okay? So what happens is this accumulation is a build-up of short orders. Price will slam down, okay? And obviously the first thing that's happened is it comes straight into this 4-hour support zone, okay? And price is pulled back. Now, if you look at this candle on the 5-minute time frame, this is very, very clear that we are now going to activate buyers, okay? Because prices come down, that's a big engulfing bullish close 5-minute candle, okay? And then nothing happens, and this is 7 o'clock in the morning till 8 o'clock, right? So this is Frankfurt open, price come up, Frankfurt starts accumulating into London, London opens, slams down again, okay? What will happen then is you'll see another accumulation. This is a little bit messy, but in terms of price action, it's not always going to be picturesque. You have to learn to analyze the market and see what's actually happening, because sometimes it will look very neat and tidy, like you see here. It will actually look very, very similar to this, okay? Textbook then. But what it generally looks like in real life is something like this, okay? So we've got accumulation, okay? Frankfurt opens, pushes price down, accumulates. London opens, price moves down again, accumulates, and then again we're looking for that bearish move because this 4-hour zone is now broken. And then when you move up again to the 30-minute time frame, if you cast your mind back into videos that I've been making and are posted in the 2.0 GFX Discord channel, okay? Look at the way that these 30-minute wicks are forming. You got a high, a lower high, lower high. No wick on this one, so there's a lot of volume in this candle. You got a new lower high, lower high, lower high, lower high, lower high. So what I'm trying to say to you here is, if you're looking at the price action on the lower time frame, it can be very, very confusing, right? Because what you've got here in terms of lower price action is you've got a rejection, right? And if you're just watching these 5-minute candles, you're going to start taking a buy, and then you're going to become the liquidity, okay? Because they're basically, all they're doing is they're creating liquidity underneath the zone. So when they do come down, they're taking out all of these stop losses from everyone who's got long into the market. All these guys now are underwater. So price moves down, rejects, okay? There may be limit orders here as well, okay? So there's a lot of activity going on here. Price accumulates, pushes down again, accumulates, pushes down again, all right? And then in terms of high time frame, okay, I don't see any reason why you'd be looking to get long on a 30-minute time frame. There's not one bullish close. Everything is following the momentum and the direction that the market is moving, okay? So concentrate on 30-minute for your entries, 1 hour, 4 hour for your areas of interest, your supply and demand zones, your support and resistance, your manipulation points, and then just follow price action on a high time frame. After you get more used to what I'm teaching here in terms of how price moves when it's in momentum, okay, you can then filter down and journal and look and become more interested in what's going on the lower time frame. But for now, study what I've talked about here, okay? So price comes down, slams into the level, okay? So there's accumulation here. This is a reaccumulation, okay? Because we're not making a reversal pattern here at all, okay? It's just reaccumulation. And then when this accumulation is over, price slams down again. Potentially it doesn't reaccumulate here, it just keeps going. But for the purpose of this video, we've got a reaccumulation because this would be a break and a retest, okay? So down, accumulation, breakout, reaccumulation, down again, all right? And then when you look at it on a higher time frame, You literally, all you've got to do is follow these 30-minute wicks all the way down. And once you start looking at these on a daily basis, journaling this on a daily basis, you're gonna find your entries maybe every morning or every New York session, whenever it is you trade, and your success rate is going to grow and grow and grow the more confident you get. You're going to make some good money trading this way. Okay, so I hope you enjoyed this video, guys. I'll see you in the next one.